Welcome traders. In this video we're going to go over the numbers that you see on the chart which compose the volume analysis, and we're also going to analyze what all these numbers mean as you see them in real time and how we're going to apply those to a real-time chart in order to make real-time trading decisions. Basically, one of the strongest points about ZoneTraderPro is ZoneTraderPro's ability to analyze volume in real time. And on the chart you see in front of us, that's what we're doing right here. We're analyzing volume in real time, and then we have a bloodhound chart. It's basically telling us the state of the VIX in real time. And ZoneTraderPro has a real-time bloodhound template that goes along with the software. So what I want to do first is I want to go over the basic definitions of what these numbers are so that you can understand them and then apply that knowledge to every chart in real time. Okay, so to start, let's go over the basic definitions for volume analysis. And these are the numbers that we're going to see in front of us. So basically what we have is we have three numbers. We have the Kp2, which represents the delta from a high to a low or a low to a high. So in this case here, as price traded down from the highs to the low, the delta was a negative 2,500. The Kp3 is the delta that represents all of the trading from a high to a high or a low to a low. So in this case, as we went from a high to the high, the delta was 395 contracts. And that's basically how we figure out our divergences. So the last number is probably the number that I consider the most important, and that is the ratio. So the ratio from the high to the low was a negative 52. And we get that from dividing a negative 2,500 by 48 ticks. So this move from the high to the low, 48 ticks, was exactly 12 points. And then from the low to the high, it was 50 ticks, so it was 12.5 points. And when you did that math, that ratio was 57. Now, what is important to understand about ratios is that they're basically relative, and we're going to talk a little bit more about that later. But what I want to see if I'm going into a trade is I'd like to see the ratio increasing from the high to the current high if I'm getting short, or the low to the current low if I'm getting long. Because what does that represent? The Kp2 ratio represents how much a buyer is willing to come in and step in right here as price is falling. And the same thing when the buyers take control here and drive price higher, this represents the amount of limit order resistance from sellers when the buyers are in control. So you got to look at it this way. So as price is falling, the sellers are in control and the buyers are providing limit order support. The reverse is true as price rises. The buyers are in control and the sellers are providing limit order resistance. So the Kp2 ratio is the strength at which buyers or sellers are providing support or resistance in the form of limit orders. And then a higher number, a higher positive number, indicates limit order resistance, and a higher negative number indicates limit order support. Now, I do have a custom indicator, and that is called special divergence. And the special divergence indicator Well, what happens when we see that is, as if we were to go from this low to this high and we were going up in price, but the number was actually negative, then that's what gives us this special divergence. And it's an unusual kind of divergence that only ZoneTraderPro picks up. The last thing that I would note is that I get a lot of questions. What are my numbers that I consider significant? And I don't really have a magic number that indicates support or resistance to the levels of what I consider distribution or accumulation. Basically, what we need to do is we need to reference past values in order to determine a current move's relative strength in its support or its resistance. So the chart I have up here on the right is your basic standard chart. And in order to get that, I basically place 4 indicators on here. At first, what I need to do though is I need to set up the data series. So normally I put a 300 tick value on here. And then what is important is that you need to enable tick replay for any divergence indicator to work. So the chart itself has 4 indicators on it. The first is the delta divergence indicator. The second is the Kp2 ratio. The third is the Kp2 and the Kp3 indicator. And the fourth is the zigzag, which creates the zones that you actually see on the chart. The cumulative delta on the chart is being printed from the delta divergence indicator, but ZoneTraderPro also provides just a cumulative delta indicator in and of itself that you can also use. The next thing we want to look at is how I go about setting up the indicator. And the most important parameters that we are first going to choose, or we're going to choose any filters. ZoneTraderPro is unique in that it can filter for the size of the order. What any other cumulative delta is doing when you put in a filter is it's only filtering for the size of the fill. It's not going back and reconstructing the tape and filtering for the size of the order. That is super important. If you want to create a filter for order size, you need to put in the numbers you want and then check the reconstruct tape. And again, you must have the data source enabled for tick replay for any of these indicators to work. Under the divergence tab, we must check 2 boxes which say show and accumulation distribution. We must check those. We also must figure out what kind of zigzag we want. And the chart that you saw on the previous page, I go with a 3.5 point zigzag. So what I'm putting in here is 3.5 points. Now, you can change that around and experiment with different zigzag values, and it's something I'd highly suggest you do. For the purposes of the demonstration, I am putting 3.5. Now, if we were setting up a spider chart, such as the first chart that you were seeing, if you wanted the SPY chart to reflect the 3.5 zigzag on your ES chart, you'd basically then put in 35 cents on the SPY zigzag. There's a setting for delta deviation, and I just leave that set at 1. If you put in a higher number, you're basically making it harder for creating a divergence. So if you wanted to make sure that you didn't have divergences when there was only like 50 contracts of divergences in the divergence, then you would basically put a number there in delta deviation. And then you always want to set the key points to a 3. The last thing that you want to do is you want to check the box to show key points delta so that you can see live real-time numbers updating on the chart. So what that looks like is this right here, where we are seeing a live chart and we're seeing what the values are going on that are live right here. So that's that last detail if you want to see that. Now the next two setups are pretty much identical, that for the Kp2, Kp3 indicator and the Kp2 ratio. So again, we can choose to filter for order size. As you're seeing, I am not doing that here. Again, the data source must be tick replayed enabled. Again, the price deviation should be set to points and 3.5 for that zigzag. And again, as we did in the last indicator, if you were setting up a SPY chart, you'd put 35 cents instead of 3.5. The delta deviation at 1 and the key points at 3 are both the same for the Kp2 and the Kp2 ratio indicator. Now, what we're going to get into next is the reason that I'm going to make this file into a PDF so that you can download it. So what we're looking at here is we're looking at price and ratio when they respond in sync. Now, this is basically what we want to see. We want to see that as price increases, a ratio is increasing. As price is decreasing, the ratio is increasing. Because what that means is that, to me, means this is the area where price is now reaching its apex. And if I have a trading signal, that this is where I want to become involved with the market. So as you can see, as price is making its low down here, the price made its low, the ratio came up with some selling. That is what is expected. Price fell, the ratio fell, and then the market orders to buy took over, the buyers took over and brought price higher. The same thing we see up at the top here is we see that the ratio is again responding with the price. And I put these lines in here to indicate basically when I think there is a distribution going on. As I said before, all of these values are relative, but I'm going to put a line in here at 70 and at negative 70. And basically what we're looking at is we're looking at price. As price came up here a little higher than 37.60, we had a pretty good Kp2 ratio. And as price fell, you can see that the buyers, they really weren't interested in being buyers at all. And then as price again rose to test the high, again, you can see that the number basically has gone from close to a 0 to over and almost about 100 when it reaches its high here. So that's what we're talking about when price and ratio respond together. Now, what's also interesting to note, and what we're going to talk about in the next slides, is what happens when price is going higher, but the ratio really isn't going higher. You see over here from 1031 to 1036, the ratio is basically going straight across the line. And what that is basically telling me is that nobody wants to step in here to really stop the buyers right here with limit orders. It's just a consistent number of sellers for this entire period as price traded from 37.50 all the way up to basically 37.59, 37.60. So there wasn't anybody stepping in to provide that resistance until the 1040 to 1043 time period, and then again at 1053. Then they were stepping in, and then you could see how price traded off. Probably it looks like at least 10 points. So that's the basic theory. When price and ratio are responding together, and you can see this little response where price goes higher, ratio goes higher. Well, that's because the market orders to buy are doing that, that's exactly what's expected. As it fell back, the buyers did step in as price got lower, and they did step in with limit orders. So that is what we want to see. So here's another example of the price and the ratio responding in sync. And what I mean by this is all relative. Okay, so as I said before, an increasing ratio indicates increasing support. And when I first saw this on January 4th, I thought there was an actual data problem with the data provider. And until I realized and actually looked at these numbers, these are numbers that I had never seen before. And basically, this occurred on January 4th, and this was the culmination of a 120-point drop from the open in the ES, with over 40,000 contracts being absorbed at the lows. Now, if you remember, if we go back to that last slide, we were seeing numbers that were in the low hundreds for the Kp2 ratio. And you just, if you look up here, the amount of buyers that took price 5 points higher was a whole 542. The sellers from down that took it down 6 points, the number was negative 1542. But what you saw right here, and you also saw this with the ZoneTraderPro indicator called Delta Strength, where it can pick up individual trades, you saw that what they did down here is somebody really put their foot on the gas, but at the same time, somebody came in and they absorbed massive numbers of contracts. And if you look right here, the indicator was actually almost at 800 when they started this. They were, the level of support was literally at levels I've never seen before. So I have seen levels in the 300s. I've never seen a level break 400 that I can recall. So this was kind of an unusual event. But again, you can see how price was responding with the ratios here. And after this low was being put in at 36.55, 36.52, somewhere in there, the price rose back 48 points. So here's an ES example of what happens when the price and ratio is not in sync. So basically, we look here between 1300 and 1400. We basically see price going sideways, not really moving one way or another, kind of a real boring trade until they decided to go up and run the stops. But what you saw starting back here sometime around the 1320 hour is you see the ratio just decreasing, and it actually ended up to be below negative 200. So that's what we were kind of looking for, or I want you to be looking for in a trade, because even though price is going sideways and this was pretty boring, what was happening is the sellers, they were trying to take it down pretty hard. But what the increasing ratio here means is increasing buyer support. So here's another example, and this one is on the SPY, because volume analysis applies not just to the ES, but to the SPY also. And what we see is price going sideways here from the 1522 area all the way to 1528, 1529. But the ratio is increasing. And when I say increasing, what I mean is it doesn't matter if it's positive or negative. What we're talking about here is its absolute value. So as price came down here, we see that the number, as it got to the apex low here, was a negative 39.84. And then over the next 3 or 4 minutes, the sellers were coming in extremely hard. And that's what you see the ratio indicator indicating, is they were coming in selling this extremely hard, but there was a limit order buyer there in support. Okay. And if you, again, the numbers here, they're again relative. But if you look at up here at what the ratio was for the sellers at 574, and that's basically about a quote unquote normal number, to down here where you see the ratio was negative 1450, they were actively accumulating them down here, but they went to accumulate them in anticipation of a very large move to the upside right here. Now, and just so you understand, the chart over on the left side is indicating that you're in a strong bearish trend. Now, we don't want to be a buyer down here. That's basically one of the rules that I've created for myself, is we don't want to buy into a strong trend, because we don't know, even though this number is large, we don't know where that number is going to stop. You know, we don't know if it's going to drop another 3-4 points. We just don't know. But over here, what we have is we also have an analysis of the volume from the low here up to this high, back to this low. And this is basically what is our exhaustion trade right here. And all of the trading that went on between the low to the second low is a different form of accumulation, which the ZoneTraderPro divergence indicator is picking up. It isn't based at all on the Kp2 numbers that you're seeing here. So it's actually based on all the trading, market orders and limit orders, from the low to the high and the high to the low. Whereas this number right here, 39.84, and then going well below 6,000, that's just based on limit order support from the high to the low. So that's something really important to take into consideration when you're making a trade. Is in this case, we had not one form of accumulation being shown to us. We actually had several. And when we compare the negative 1450 with what happened at the low right here, negative 39.84, we've more than doubled this number, and the number ends up being more than 4 times the value as price is trading here at 378, 85, 90, somewhere in around there. Here's another example of price and ratio not in sync on the ES. And what we're looking at here is just a really great setup for a short trade, because what we're seeing is, again, we're seeing this price go basically sideways, and we're watching the Kp2 ratio just increase. And what's also unusual is if you look at this point right here, as price was falling, the ratio itself was actually increasing. That is very uncommon to see, but it is very welcome to see if you can identify that in real time. It's very uncommon to see price drop right here, but the ratio actually increase. So this is just something, again, that we don't see this too often, but we want to be aware of it when we do see it, because this is an excellent indication that we might want to be short. And as you can see, the market sold off 12, 13 points going into this trade here. And again, what we want to do is we want to compare our values, and we can see that our previous value right here We come down to here, it was basically special divergence. It was at or around 0, and there wasn't any significant resistance being put in as price went from this low to this high. You can see though that when we compare it from here to here, again, the comparison is what is important and not a magic number. On our final slide, basically I want to talk about strong trends. And in this example, what we're seeing is basically what I illustrated on a small scale on the last slide, but now this is being illustrated on a larger scale. Because what's going to happen? Well, as I just talked about in the previous slide, as price was coming down, the ratio is increasing, but this time we're seeing it over a 15-minute period. And then we see at the high right here, going into the close, we see the ratio again getting higher than previous. And again, what do we have? We have a 15-point sell-off into the close. In my opinion, going into the close, they were preparing for futures being sold after the market had closed. But it's just an excellent example of what the ratio indicator is basically telling us as it is doing its job. That's going to conclude all of the slides that I have for presentation. And next we're going to look at some charts in real time. Okay, I next wanted to review some live charts, and I saw something very interesting on the live chart from today, which is the morning of January 21st, after the big 50-point S&P move under the inauguration. What I saw interesting here is this sell-off that occurred right here. And what I found interesting was to understand how ZoneTraderPro works, you need to understand where the zig becomes a zag. And as I showed you in the setup video, we zigzag at 3.5 points on this chart. Well, if you want to understand where that is happening on the chart, you simply look to where a new zone begins to print, which is right here. So at this point right here, what was interesting is this is a typical trend trade right there. And we had a really good number as far as resistance goes right there of 103. And then at this point, this is when we begin to measure support. And rather than support being down here, the support is at a positive number, and then it actually climbs again following price as price got higher and reached a level of somewhere around 165, 170. And then we saw price sell off right here, and then we traded into this distribution trade, which was good for another 8 points. Now, again, what this is all about is it's all about how you read this indicator right here. And initially the read on the indicator gave us a very good number right here on our trend trade. But as price sold off this 7 points down to here, we see that the limit order sellers were present and were providing an extreme amount of resistance right into our distribution trade, which was then good for another 8 points. If we look down to our accumulation trade here, again, what is happening at this point right here? Price is following the ratio, price drops, we get again a relatively high number here, and we have divergence going on right there. Currently in the live market, You can see that at the point where the new zone formed, we have increasing ratio going higher into the 38-48 ratio. Now we're going to look at some ratios from the January 20th, the inauguration day, the day we were up 50. But first I want to show you what the spider divergence was telling us. So the first thing we want to understand is we want to understand the template that we're using here with Bloodhound. In this case, I've chosen the VIX template because the VIX template is accurate at the open. And let me explain why. Okay, here are two live VIX charts. The chart on the left is the VIX 90, which is the chart I prefer after the morning session has opened, generally 15 or 20 minutes. And what you see on that is you see that the VIX 90 chart, there is a break after 1600, probably 1615 hours. And then the chart resumes charting at the open 9:30. On the VIX chart, you see that the VIX opens much earlier, probably at 3 a.m. So what we see on the chart on the right is that the VIX is opening much earlier in the morning and thus giving us a better answer for the open. Now, what is important to do is that you come to the data series and you change trading hours from use instrument settings right here to default 24/7. And when you do that, what you're going to do is you're going to get the entire picture. And so for that reason, the VIX template is more accurate at the open because the VIX 9D chart hasn't started to work yet. Now, what the VIX 9D chart, the difference between these two charts is that the VIX 9D, which is this over here on the left, is looking at options that are expiring in the next 9 days, whereas the entire VIX is looking at all of the options out there. So you can see that in real time, there is basically a 2.5 point difference between the VIX 9D and the regular VIX. So now that I've explained that, you can see that the template up here I'm using is the VIX template. And so at the open and for the next hour, you could see that we had these 4 consecutive winning trades when we were trading spider divergence with the VIX. And then in the afternoon, we had 4 consecutive long signals into the high of the day, which was a pretty impressive score for the SPY software. Now, the reason I'm showing this right here is because I want to illustrate a point with the Kp2 ratio on the ES chart. So as we're looking at this ES chart, we're not trying to be a seller here, so I don't want anybody to think that we are. What we're trying to do is we're trying to be a reader of what this is telling us. And basically we can come back and we can look at right here and we can see that the Kp2 ratio is declining starting basically right about here. It had performed as expected up to this point, but right here, this is the point that the sellers basically gave up providing resistance. Now, why is that important? Well, let's just draw a horizontal line right here on the chart, which kind of is about the spot that they start giving up resistance. But remember, the number itself does mean something. It means that right here there was approximately 137 contracts short per tick at this point right here. And what that was saying is that there was a lot of short sellers on limit orders up to this point. So we've drawn our horizontal line here, and what is interesting is these are where we're getting our buy signals on the SPY, and it just about coincides with the area where those short sellers would have had their first opportunity to get out of their trades from back in here without taking too much of a loss. Now, again, the other thing that we want to look at is we want to look at the ratios, and we look at this 36 and we compare that to this 75 right here, and we note that we're basically doubling the ratio. Now, this is the area where we did not have a SPY divergence long signal, but we did right here. So that's what makes this and this even more important, because this is basically a reversal pattern and that is a trend trade. Now, what is also interesting is to analyze what was happening here. You had this huge move, almost 20 points higher, and what is happening right here as price went sideways is that people came in with limit orders and they were going to support the market. That's what we actually see right here. So this is an instance where what the ratio is telling us is that there is support of the market. Now, what is interesting to me though is the absolute number. From the apex here to the low here, that number was 2001, and it increased on that increasing ratio to over 3,000 contracts right here. Now, that's the purpose of having this indicator down here and knowing these numbers. There were clearly a lot of people that were trying to get out and take profits after this very large move. And this is why this strong trend trade here is a high risk trade. Because what was happening? Well, the people were taking profits, but what it created is it created special divergence exhaustion sell signal up here, which was again good for almost 6 points on the way down. So it wasn't really a great idea to be a buyer here, although the ratio was telling us this support that was being given right here was basically from the dumb money thinking that this is the first pullback and that we're going to see 3,900 on the S&P in about 10 minutes. And they were obviously proved wrong. The point is, if you stick with the combination of the VIX and the SPY divergence, you're not going to get caught up in the euphoria of trying to buy this here and then only to see sell signal and a reversal pattern up at the top right here at the test of the high. Now again, in the afternoon, we again had a second impulse strong trend that was good for almost 15, 16 points. I'm going to put the horizontal line where the sellers gave up, and that's basically right about here at 38.39. Notice on the pullbacks that where the sellers basically gave up, this is where the market came and then bounced off of and basically came and rested at the close. So it is, to me, very important to note approximately these levels and to look for signals of the spider divergence in these areas here. Okay, now that we've looked at the indicator itself, let's do a little look at what these numbers actually mean. Because as you can see, what is happening here, and this is actually extremely common in a long situation, is we build what I call the box, which is we get a special divergence short signal, but then an accumulation long signal. and it continues to just box its way higher with these signals until the box gets broken, and then we end up selling off. What usually happens is we end up breaking the box with a special divergence to right here at this test of a high, and then we get the sell-off. This is kind of just something that is unusual that happened yesterday, but I can find dozens of examples where you're going to see a special divergence right here at the end of this extremely strong trend. Now, because numbers matter, let's take a look at what is happening. The number that we're going to be looking at is the Kp2 ratio right here. And again, what I've said is that there is no magic number, and what I want you to do is I want you to take things that are relative. So as we see right here, as we made the low, our ratio was just about a negative 900, which increased to about a negative 1300 right there. That increased to a negative 2100 here. And then here we have a super strong number of negative 5500. And look at what is happening each time. Each time the sellers are coming in and they are selling it extremely hard. That's what this 334,000 shares is telling us. But what is happening is, again, the limit order buyers are absorbing that and preventing price from going any lower. So that's what we're looking at right here. Again, here for this pullback of 8.5 points, 85 cents on the SPY, they sold 182,000, and the buyers accepted that at a rate of over 2,100 shares per penny. So that is the reason why the ratio becomes important, is because we see where they are really putting in their support and their resistance. Now, up here, we see that the ratio is only a 14, which basically meant that this was almost special divergence, and price rose 10 points on the ES, but it rose on a delta of only 1,300. That's what you need to take into account. Here, we see a negative 80,000, which is a good number. We see a negative 109,000 there. And at the very top, they were buying, but the buying was just shy of what we needed for another special divergence right there. But then when they came up and they were sellers and they sold it off right there, we see that they flipped their resistance and they were now short on limit orders to the tune of 1,600 shares per penny as the price rose 3.5 points. This chart takes us to January 19th, basically 2 days ago. Again, what we see down here is after the VIX flips, we see the accumulation long trades. And this is about the time, I believe, Janet Yellen said we needed to throw $1.9 trillion from a helicopter. And price ended up rising significantly from that point. However, going into that testimony, you can see that we had numerous short signals. And here's what I'd like to emphasize about these short special divergence signals. What you're looking at, what you should be looking at, is the number of shares here in the KP2. You shouldn't be looking at just the fact that we have a red line and an arrow, okay? Because what we're seeing right here with a red line and an arrow, that is the ultimate point where price stopped going up, but we may have gotten the signal back in right here. And what we want to do is we want to make an evaluation, and we can do this in real time because are they, as price goes higher, are they increasing or are they decreasing, and just how strong this number is. So if you get a number that is, say, may only be negative 5,000, well, that could explain why the pullback, while the trade would work, but the pullback is mainly only good for 3.5 points. And then you get some kind of accumulation long signal on the other side. Real important to look at these numbers. I'm going to show you how important next. Here was the open for the 19th. And if we come and we look back here on the open, as we got to the high, the number was a negative 95,000. We made a quick move down, and then we tested that high again with a negative 17,000. And then after that, price sold off almost 15 points. Here's another large sell-off on the open from the 15th. And you can see that at the open, they were short 60,000. They added another 14,000 here. They added another 42,000 here. And then what finally broke it for a significant drawdown was this negative 27,000 that was there. I found this interesting, where we had a distribution signal with a very high ratio number here, and then it was immediately followed up by an excellent trade for almost 10 points with this special divergence. And we didn't need a very high number here because of all the short interest that had built up from back in here. Here's another example again on the open, where on the open they were short almost 248,000 shares at this point. We saw that we had a 7-point pullback, but then that was followed up by a distribution divergence signal plus a very high ratio of the Kp2, it in and of itself indicating distribution, and then we saw a 13-point drop after that. Here's another example of the boxing pattern that I was talking about, where we just have consecutive accumulation trades being fired off. In this case, we have 1, 2, 3, 4, 5 trades that fired off for a significant gain, and then that was preceded by these special divergence trades that we have here. The first one being with just 11,000 shares, but at the high right here, it had 125,000, 34,000, 88,000, 39,000. And as you can see, that was a tremendous 35 point drop that led that off with just a very good number from up here. This is a real good example right here again of the pattern that is going to be taking us long. And the point that I need to make here is that when we look at the actual numbers, we see that we got a signal here. The number wasn't the strongest in the world. It was only at 20,000. And then here it was only 11,000. The point I'm trying to make here is that the accumulation signals here are giving us a warning about our short trades, and then we should be analyzing how much these values actually are. After we make this second trade, then what happens is our background actually goes green. And we can see that if we don't immediately get out of that trade, it does go for 4 points. But if we don't immediately get out of that trade, we're going to be underwater in about 10 minutes. So we have to use these accumulation signals. You have to take them into account as to whether or not you're going to employ them in your trading plan in order to get out of the trade. I found this series of trades interesting also. Again, you can see at the open where we had a very large number, 106,000, followed by a small number there, 6, 60,000, 30,000, 60,000, 39,000, and 22,000. Now, what is again interesting right here is that while all of these short trades, they definitely worked and we took our profit, what they ended with is they ended with a very unusual double divergence signal right here of special divergence with accumulation. And then at this point, if you had not been out of the trade, our VIX is telling us that we definitely should have been out of that trade. And then what you see is, again, you see that pattern of where we got our pullbacks to was the level where all of these people are short and underwater, and the market's going to trade significantly higher. Here again, another couple great examples. And what we're looking at here is our first special divergence, and we notice that the number is not all that great. We notice that it only goes about 4 points into this accumulation pattern, and then up here, that's where we get a much stronger number of negative 48,000, followed by negative 27,000. Again, not a very big number right here, minus 416, but that actually led to a 20-point drop. Again, negative 110,000, negative 15,000. Again, where this ended is we started to develop accumulation patterns down here, and then we ended up getting most of that back. And what preceded that in the morning was a negative 48,000 there, negative 42,000, negative 95,000, negative 2,000, negative 41,000, negative 45,000, negative 25,000, and a negative 40,000 there. And then you can see that that ended up in a 15-point move down. And the last example I'm going to show is here we have an example where we open and we have a positive 48,000 shares there, followed by a positive 60,000 shares. And then what we want to note here is not only the accumulation divergence signal, but we also want to note the level of the Kp2 ratio itself, which was a negative 3,600 shares per penny. And we see what that is going to take us. That's going to take us over 22 points higher. And then that is going to be followed up by 2 additional SPY divergence trades here. Last thing I wanted to leave you with is just to remember that the purpose of this video is to be looking and analyzing these numbers here. It's not to be analyzing what the VIX background was telling us here, because I have different VIX templates that I rely on for different times of the day, such as the real-time VIX and the other VIX template where it's just looking at the VIX, as I explained earlier. So I'm not focused on the fact right here that we're getting a red VIX background. What I am focused on, and the point of the video, is to look at and explain the numbers that are going on with the ratios. And just like everything else, what is more interesting to me is how this ratio indicator right here just performs tremendously, and the same principles apply here. So as price was basically going sideways and then just a little bit down, we see how this ratio indicator here was just indicating a strong area of support, as it did over here as we saw this little pullback right here. don't just use the ratio indicator on the ES chart. You should be also using the ratio indicator here on the SPY chart as well. I want to thank you for watching, and if I haven't answered any of your questions, be sure to shoot them to me. The PDF file that I created is going to be available here under the support and getting started tab. So if you'd like to download that so you have a reference, you can come there and find it there. The last thing I wanted to add is what you as a user need to do to understand this. And that is to go and to load 14 days at a time with a chart like this and just look at every turn in the market. Now, every turn in the market is not something that we are going to be trading, but it does provide you information and a base of knowledge. So for existence, this is the close on Friday that just occurred yesterday. And we see here that we had price trade to our resistance level, and we notice that the resistance number itself is again very high, up in the 170s and as high as 225 when it first got here. But then we notice over a period of time how that decayed. And was that telling us something? My answer is yes, because on this pullback, we did eventually get the pullback, but then we traded even higher. So at the high going into the close, we didn't see that behavior where the ratio was decreasing. We saw that the ratio was increasing. And we found ourselves in a completely different market behavior here and close to a 15-point sell-off, whereas here, this was telling me that the sellers were lessening their resistance, and that's an indication that price can go higher. Then when it did, we saw the increasing ratio, and we have a 15-point drop in the market. What you can do as a user is to go and explain and look at every single turn in the market so that you can understand the indicator itself and not just rely on this video to learn what this indicator is telling us. I just pulled this chart up. I've never seen it before because I was working on the video on Friday, and again, all I see is the main points that were covered in this video. And the way that I had to learn what this indicator was telling me was to do exactly this, was to put 14 days on a chart and load that up and then look at every single turn, look at every single move in the market, focusing especially on what happens in a strong trend, such as here and here. And that's how I developed the skill to learn and use this indicator. So I wanted to add that after I'd completed the video, and hopefully that will explain how you use the indicator and learn the indicator. Thanks for watching. Everybody stay safe. Have a good day.